Hello, I'm Liz Lumley, and this is Finextra at Sibos, and we've gathered together some of the top thought leaders to talk about Sepa, the single euro payments area. So I'm going to start off this conversation talking about that most of the industry knows the promise of Sepa, that this will be a single payments area for Europe. But I'm going to start with you, Paul. I mean, is the industry really aware of some of the challenges that are going to come from this?
If I think about the feedback that we're getting from our clients, there appears to be two types of challenge. Number one, achieving basic compliance. And to some extent, I think the industry is aware. They are aware that there's a deadline. They're aware more or less of what they need to achieve for themselves. And there is an acceptance about whether or not they will make it. The second type of challenge, though, is more subtle, which is Sepa in the supply chain of a transaction. And we are seeing clients now beginning to worry about whether or not their suppliers are Sepa compliant, whether or not their banks are compliant, whether or not their banks, correspondent banks, are compliant, whether or not their payroll systems are sufficiently up to date, whether or not their HR providers are sufficiently up to date. And so this additional challenge, I would say that on the first part, most people are aware, and there is a building consciousness about what needs to be done. On the second part, there appears to be a dawning but fastly approaching concern.
Yeah, I saw you nodding. I wanted all the banks to come
I would say there is a different sense of awareness, and I would make the difference also between banks and clients. Banks, we've been working on that for years. We're investing massively on that front. So of course, the level of awareness is there because we had to pay for it. We had to adapt our systems. So that's right. When it comes to the clients, it's quite different. I would say it's quite different. When you speak to large as well as small clients, they are vaguely aware, irrespective of the effort we've been doing on the marketing side to make them aware that they were directly impacted, especially on the SDD front. But it took them a long time to understand that they had to get their own organization up to standards. And that's where we struggle all. So we banks, we are ready, no doubt, no issue. We had to be compliant and we are compliant. Making clients understand that they just have 3 more months to get compliant, that has been the tricky part, and it's not over yet.
Yeah, it seems like the bank story is over, and it's now that whole ecosystem.
Yes, and it's not a given for clients because they had to invest almost as much as we had, whereas there is no business case for them. It's just to make the remittances fly through as they used to do before.
Sorry.
Sorry.
No, I didn't mean to interrupt.
And I would say the tricky part is to make, say, purely domestic clients understand that even if they didn't trade abroad, they had to make their organization compliant.
Okay.
I was just going to come back on something you said, Liz, actually, that the bank story is over. I'm not sure that's true. Because to be perfectly honest, I think that I totally agree with Pascal. We've been doing this for years, right? How many conferences have we gone to as banks talking about Sepa for the last 7 or 8 years? But I think as we get closer to migration, as we get closer to the deadline, and then, to be perfectly honest, without being pessimistic, post-deadline, I think the work really starts. And I think for banks, there will be, in fact, a re-acceleration of the Sepa initiative in terms of investment and in terms of energy, because then we will really have something to do.
Yeah, I heard Growler. I mean, was that wishful thinking of my part, saying the bank story was over?
I would say, with the banks, it's no different than with the corporates, right? The more sophisticated, the ones that have a broader footprint, are ready or have dealt with it. They have come to those conferences. There are many banks that have not grasped the entirety of the challenge, and it's the same with corporates. So when you speak with regulators, they're actually greatly concerned about the preparedness of corporates as well as some of the banks. So I think it's going to be quite a race towards the end, and clearly, we have to get there. And in the end, it's like many other initiatives, we will get there. But it's going to be an interesting final, 6 months or so.
Yeah.
5.
So like
4.
3.5. February.
1st of Feb.
Yeah. So looking at those challenges, then how is Sepa really going to impact banks' operational processes?
Well, in theory, if everything works as prescribed, right? It's a prescription that got laid upon us. It will improve. It has to improve the straight-through processing, undoubtedly. I mean, the very big opportunity is that the upside is that it's one format. So in principle, everyone works on the same format. Now XML, now we've had some iterations of this too, but at the end of the day we'll come to one format, and corporates will have to present data in that format, and therefore straight through should go up. It actually has to go up, because no longer will banks be able to charge differently for different payment tools. And Sepa is to benefit the corporates and the consumers. So banks had to invest a lot of money to make this happen. And the straight-through has to, so straight-through processing has to be straight-through processing and not straight-through printer this time. Otherwise, it's actually going to become a very costly exercise.
Does that ring any bells? Does that ring true for you too?
Fully. Irrespective of Sepa, we're anyway pushing on the STP, that's for sure. What it made is that it was a strong integration factor. So it pushed us, especially in organizations such as us, where we built up the network a lot through external growth, and we had to live with various types of IT systems and so on. The Sepa was the catalyst to force the organization to move towards a system that was much more integrated and that enabled us to do more STP.
Okay. Do you think there's a bit of a pushback for STP inside banks, or there's a bit of a challenge providing that?
In what sense? Sorry.
Like that it's sort of, hard to implement, sort of a true straight-through processing environment?
I think it very much depends on the bank, to be honest. Michael referred to this earlier. Different banks are taking a different position. And if you look at the entire spectrum of banks in Europe, I don't know, there are 8,000 financial institutions in Europe. I think there are a small number of financial institutions that have invested heavily, that have upgraded their systems, that see this really as a growth opportunity and an ability to actually take on the problem for others. I think for a large number, if we're totally honest, Sepa is a compliance exercise which needs to be overcome, and whether or not you do it in-house or whether you work with a partner, be that another bank or a vendor or an IT provider, and effectively you have to demonstrate your compliance, but your interest in the topic really stops there. But I don't really see a pushback. I just see a splintering of approach as we get closer to the deadline, and people are forced to make a decision about how committed they are to the project.
How committed we are to Sepa.
Yeah.
I would add, I think it's a real necessity, right? Banks will have to improve and have to gain straight-through processing to the 99.9 something percentage, because there is no, otherwise it's going to be very difficult to deal with the price, right? I mean, let's face it, right? The fees that are spent on payments are going down, and I remember there was a discussion whether Sepa will enable banks to reach into different markets. Right? So will we see more competition in different markets? I think that very much depends on how much you can invest into systems and how much flow you have. And the more flow you have, the more automated you have to be. Otherwise, there's going to be a major backlog.
It's a volume-based activity anyway, so we need to have that industrial approach. So I say, irrespective of whether it was Sepa or not.
I wanted to bring you into the conversation about whether or not we need sort of real-time monitoring to fully implement Sepa.
I think it's interesting to see that, of course, banks have focused on implementing the execution part of the process, of the Sepa process, because it was absolutely a must-have for the end date, and so it's been a big focus of all our clients over the past few years. Now what we see, and you've mentioned that, is that at the end of the day Sepa has also been implemented to allow corporates to have more flexibility in choosing their different banks. And what we may see in the future is that corporates will consolidate accounts. They may not need anymore one single account in each single country with each the local French bank, the local German bank, and the local UK bank. And at the end of the day, I think the banks that will win in a way are the banks that will be able to provide a better service to their customers through this Sepa implementation at a lower cost, or at least at an acceptable cost. And what we think is that they will be able to do that only if they are in control of the process. And only because what you can see is that a single hiccup or a few hiccups in your process may ruin days and months and even of profitability of the process, because the margins are very low. And so if you have just one single hiccup, one day it can ruin your profitability of several months. So if you want to avoid that, and if you want to be the bank who will really provide more value at a lower cost to the client, you have to be in control of your process. So you have to be able to monitor in real time and to know exactly how you are processing the different files and the different transactions. Make sure that you do receive the files from your large corporates on time, that they have the right formats, and the banks who will be able to provide more services to the clients will probably, maybe not in February 2014, but later in 2014, 2015, will probably get some value from the Sepa implementation.
And I think, sorry, I was just going to say, and in that sense, that is the vision. Sepa is an enabler of what you've just described, because in allowing the industry, and I use the industry in the broadest sense, in allowing the industry not to have to worry about the legion payment formats, the different complexities, the different peculiarities of different markets, it allows the industry to actually build around a common standard. Real-time reporting becomes that much easier because we know exactly what we're looking for, and we're all looking for the same thing, which means that actually right at the start of the chain, payments issues are pulled out of the system. And in that sense, we can all focus exactly on the value-added services. I'm not sure I would totally agree that we will need to wait so long. I think that already there are value-added services that we can start to see, even just in something as minute as the mandate management collection and so on. This is already a common value add that will save a lot for corporates and for banks. So I think, to be honest, it's an enabler.
Okay, so you're saying real-time reporting will become easier? Yeah.
I would say it's already a reality, right? I mean, I would not think Sepa is a catalyst for it. It becomes a necessity for banks to have real-time monitoring over time, because the only way to survive in the game is if you have large volumes. The only way to survive large volumes is if you identify an error rejection early. So I think for us it's just a mere continuation, but it's going to accelerate for many. And I also agree that value-added services will start quickly. But I totally agree that if you keep volumes ramping up, so if you do large utilities transactions and other transactions, you need to know that something is wrong early in the day and not at the end of the day. Because, I mean, one, you may have real losses, the other piece is simply to repair is going to take for a very long time. So I think it's more a continuation, but I didn't want to interrupt you.
Back to Paul's point, I think as far as corporates are concerned, we should see two phases. Let's make the cut, that's the first phase. And afterwards, it's just reopening some new ways of looking at the way business is done. So we have been speaking about payment factories for years. I think that would be a new starter for real payment factories across the Sepa region.
Okay, so here's a final question for all of you. February 2014, the next chapter in the Sepa story. It's not the end. But how much do you expect Sepa transactions to grow then, post-February?
Difficult to answer. I say for a start, let's translate the current flows in the Sepa flows. And I think there will be a phase that will be maybe some disruption to the system. So I'm not expecting flows to speed up from day one. But let's say maybe a start of the second half. That's a start, but maybe it's further down the road that we will see whether it has really an impact, especially on cross-border flows. So it's maybe 15, 16 and going forward.
Do you agree?
I do agree, but I would make a small distinction. I think migrating to SCT is going to be relatively simple, especially for those institutions that have been in the habit of using the XCT up until now. So I don't think that this is a huge challenge, and philosophically, it's no big struggle to make the move. I think for the SDD, I think the migration speed is dramatically different and not consistent even by country. where they have been used to different levels of quality and service on the direct debit instruction, and the migration will be that much tougher. So I think we will see a different trajectory between SCT and SDD.
Totally. I mean, you can even argue whether, you know, what the percentage is. I mean, for both, it's clearly exponentially given the current percentages, and it's a clear necessity. And I agree that on the credit transfers, I mean, that has to happen. On the direct debits, that's going to take a little longer. And then I think on the B2B side, we'll even see more challenges on the horizon where many banks may not be ready for it. So the larger companies are struggling. But I would say the simple answer to it is exponentially. It has to come.
And on the SDD, there is one question mark, one concern, which is, especially for France, the Sepa system is more open and less secure than the old domestic ones was. So should there be some testing from fraudsters on the way the system is resisting, there could be some potentially, I hope not, but some negative press that may, say, counter impact on the way the speed of growth goes. So, let's see. I think the first weeks will be critical to see if people are testing the system to their limits. Again, on the SDD. SCT for me it's a no-brainer.
Yeah, I think there will be, I mean, it's obvious and everyone agrees on that. There will be a surge of volume around right after the end date, and then maybe it will then grow again progressively. But